you touched on a moment ago, right? We're talking about diversifying, right? So we talked about bonds, and then you mentioned a little bit about crypto.
Yes.
So you're into crypto at the moment.
Sure.
So why?
Well, crypto has zero intrinsic value for a Wall Street guy like me or Warren Buffett. Like, we really don't understand it because we can't use the typical metrics.
I'm kind of with you on this. There's no intrinsic value.
But you know what there is? Let's talk Bitcoin
There's
for a
no
second.
gold standard.
No, it's not gold. A lot of people want to compare Bitcoin to gold. Don't do that. You'll be very sad. But the one thing about Bitcoin is there is a finite amount. Okay? There's not a finite amount of gold. There's more gold than we can ever mine, and there's no telling how much there is.
They put it all in a fort.
Yeah. But exactly. But Bitcoin, there is a finite amount. So when you talk about valuing Bitcoin, it is based on two things. Number one, the finite value. Okay? The finite amount of it creates a value, perceptual. But the biggest thing with any crypto is investor confidence. What are people afraid of right now? They're afraid of this. They're afraid of holding the cash because they know it's losing money.
Faith in the dollar.
Right, the faith in the dollar. So what's the alternative to the faith in the dollar? Gold, but gold's pretty high right now. Silver, precious metals, yeah, maybe. Or crypto, the new kid on the block. It's not really that new, but it is. So a lot of money has flown to crypto. We have millennials now making good money. Actually, some millennials are making significant amounts of money.
Bitcoin millionaires.
There you go.
Yep.
So they're putting money into crypto. And I think crypto, so there's two ways to look at this. We all heard recently that the government's going to, in February, do an executive order to start monitoring crypto. We knew this was coming. So if you think that was a surprise, I don't know what rock you've been living under. But here's the thing about crypto that's interesting. You can make a ton of money in crypto if you get rid of FOMO. FOMO is the fear of missing out. If you stop chasing unrealistic returns, if you stop thinking that Bitcoin's going to go to the moon. I mean, how many times did I have to hear in 2021, Bitcoin's going to be $120 or 120,000? I just listen to people and I'm just like, okay, great. Whatever you say, buddy. It's like your Uber driver telling you, oh, you buying Bitcoin, you buying Doge, you buying, Shiba Inu or one of the other many garbage coins. I don't want to swear, but we know what they're called.
Altcoins. They're altcoins.
Altcoins. We'll just call them.
But we have friends that are billionaires in Shiba Inu or whatever.
I know, and you're going to. I mean, it's that time. You're always going to have the early adopters that make a bunch. But for every one person that becomes a billionaire or a multimillionaire on it,
it's billionaire, but you can't access it. So
bingo. That's the problem. Where's your liquidity? You see, when you talk about money, what is money? Money, which is the only thing we can call money in this country, this is a means of exchange. Money is a means of exchange. Money for food, food for money. Money for car, car for money. Money for house, house for money. Can you take your Bitcoin, Ethereum, Doge, Shiba Inu, whatever one you want, and buy bread? No. I mean, we did have a glimmering hope when Elon said, hey, you can buy your Tesla with Bitcoin. Woohoo! We're starting to get there. Now we got an exchange. Then he came back and he said, hey, sorry, Bitcoin's bad. Bitcoin mining is bad for the environment. You can't buy a Tesla anymore. Darn. Yeah. Or you're going to buy the Tesla, and all of a sudden when you're ready to pay for it, your Bitcoin just fell 30% overnight. Right. It's very volatile. But that volatility can make you rich if you know how to trade the levels. I mean, how I've been doing it is for a while when Bitcoin was going up and trading, it traded $40,000 to $50,000. I'd buy it when it got to 40 or 42, and I'd sell it when it got to 50. And then when it ran through that one time and got up to 68, I held it a little longer, and I think I got out at like 62, and people said I was crazy. Why'd you sell? Because, listen, I'm an investor, and I invest with rules. So I follow my rules. I actually broke my rule there and waited a little longer, and I got out. So now, where did Bitcoin just go?
I think, did it hit 28?
28, yeah. It fell down to 28.
So what are those rules?
Okay, so you want the rules for investing. It's very simple. Outline how much money you're going to allocate in your investable assets into any one asset class, okay? I don't care if it's stocks, bonds, treasury bonds, futures, gold, any of those. That's why we build these portfolio models. How much of your investable dollars should go to each one of these asset classes? It's diversification. Secondarily, you then have to establish what is going to be your entry point. Well, some people just don't know how to do this. And the only answer I can give you, if you want to know when to buy, the answer is always. Dollar cost averaging. Bitcoin, like I buy Bitcoin and Ethereum. Those are the only two I really care about. Maybe Cardano, but whatever, Bitcoin and Ethereum. Every single week, I put several $100s into each of them. systematically. I don't care if it goes to 60. I don't care if it gets down to 28. But this recent fall, when it was falling and it got down to, I started buying at about 34,000, and I bought deep, and I was buying, and it dropped, and I was buying, and I dropped. I was buying chunks. I was dollar cost averaging the whole time, and then I was buying chunks. Now when it comes back up, so my rule is, what is your buy-in point? Well, my buy-in point was actually 20,000, because I think we will test 20 to 23 based on the resistance levels. And I figured, all right, we might not get that low this time, so I started buying heavily. But you know what I will do? We're now, I think, about 40, maybe even approaching a little more. I was looking at it earlier. My selling point, I'll start really considering selling that position at about 45. If it's running really solid, I will hold it no more than 50. The rules. Your buy rule, set it. Is it just dollar cost averaging? Great, don't defy that rule. Is it I'm going to buy when it gets to this price and I'm going to buy up to 10%? That's your rule. But don't just buy. That's not the most important thing. Where are you going to sell? What's your exit point? Because there's 3 rules to investing. Buy low, sell high, and don't lose money. The third, which you started with, is an automatic if you do 1 and 2. So those are the simple rules. There's more, but set your parameters, set your rules, and follow them.
I think kind of what you're saying indirectly is make a decision, have a plan, execute your plan, and remove your emotions from it.
No emotion. That was just tough. Like for me, I have emotion, okay? I don't trade my portfolios, and I have zero money in the stock market. We have a private hedge fund, and our private hedge fund invests solely in individual companies that are not public, that have an exit strategy, or will be going, to an IPO.
So a former Wall Street guy, $0 in the stock market.
Not 1 penny.
Why?
Because I know what's coming.
Because what you're seeing right now. So last year, did you have money in the stock market?
Very little, but I have a trader, so a full-time trader's named Sodi. He was trading, but we would trade options, and we would trade options intraday, meaning during the day. When the market opened, we would trade, and when the market closed, we were already out of the position. We never wanted to hold overnight, and then we started holding overnight a little bit, but we were hedged. So we would not get into it, but if the market tanked overnight, we had a hedge, almost like a position that would make money if it went low, and we did that.
So it's fascinating. Yeah, so